Hi there. I produced this guide to investing to explain the difference between most investors and the successful investor. For most people, investing, whether it's pension funds or investment portfolios, is usually a roller coaster of emotions. When markets are going up, they think they're doing fantastically well and they're the greatest investors ever and they're going to get really rich and it's going to go on and they found the secret sauce to successful investing. But what inevitably happens is the markets turn and they see their values of their pensions and their investment portfolios fall. We've seen it in living memory in the 70s and then end of the 90s with the bursting of the tech bubble to the second Iraq War. We saw it in the great financial crisis, the credit crunch of 2008, and we saw it in 2020 with the height of the coronavirus pandemic. And what happens when the market falls is people get initially a bit nervous and then panicky and then fearful and angry, to the point where most people will panic out and say, I can't take this anymore, I don't want to see any more losses in my with my money, I'm going to sell out. And of course all that happens then is they've got actual losses rather than just falls in valuations. And then what happens is the markets recover, or investors will follow a different trend. It might be cryptocurrencies, as is the flavour of the month at the moment, and they'll follow that the next cycle all the way up, and it'll get higher and higher and they're thinking they're doing really well, and this time it's different. This cycle is going to continue and I'm going to make a lot of money, and of course then that one peaks and falls again, and we just repeat that emotional cycle that they go through. Whereas for the successful investor, they know that markets run through cycles and they know there will always be downturns, but the worst thing to do is actually sell out. They're investing in over the long term and know that they're investing for a particular purpose for their money and can accept the peaks and the troughs that come with investing, and will invest with patience and discipline, so they are able to separate the emotion from the practicalities of investing. So I hope that gives you a bit of understanding on the successful way to investing compared to how most people do it. If you've got any questions, do let me know.